Well, it is a Bloomberg Crypto, so let's get a check on prices as the markets are under pressure. Taking a look at how things stand when it comes to Bitcoin, under pressure today. Interestingly enough, kind of seeing very similar moves with Bitcoin that we're seeing on the S&P 500 right now. Bitcoin, for example, down 1.9%, tumbling to erase a brief rally above 70,000. That was dragged down by concerns about a lengthy conflict in the Middle East. Crypto markets across the board, though, in the red. Investors are fleeing riskier assets. Tokens like Ether and Solana also decline. Ether down about 3.5%, Solana down 3.2%, XRP down 2.6%. I guess, Isabel, the question is there anywhere to hide on a risk-off day like this? And it goes back to the narrative of, what exactly is Bitcoin? Is it a safe haven? At least not today. At least not today. It's trading definitely like a risk asset. If you look at the next screen, you're also going to see red on the screen. Let's take a look at some individual asset managers. You see Coinbase, Robinhood, Circle, and Gemini all in the red, except Circle. You see it popping there, up by nearly 7%. So barring Circle, cryptocurrency-linked stocks are sliding as Bitcoin and, of course, other risk assets are tumbling again on Tuesday. I want to point out that Mizuho Securities raised the price target on Circle to $100 from $90. They also maintained a neutral rating. That's likely why you see a pop there. In Gemini Space Station, of course, this made headlines last month after 3 top executives left the company. Year to date, though, all of the stocks you see on the screen are in the red, except also, again, Circle, which is up by 24%. Flip up the board and we look at digital asset treasury companies and also miners. You see MicroStrategy, Nakamoto, Riot Platforms, and of course, the Trump-backed American Bitcoin. And again, it's red on the screen. Everything is down by at least 2%. We have Michael Saylor's strategy buying more than $200 million worth of Bitcoin yesterday, Monday, turning to common stock to finance the bulk of its acquisitions. Again, this is despite promising to lean on its perpetual preferred shares. And of course, we have to mention the American Bitcoin Company. This is a Trump-affiliated firm. It is expanding its mining-owned capacity by around 12%. The Miami-based company has been doubling down on a pure mining and hoarding strategy, just as virtually every company has fled away from that. Interesting in a time when the crypto market has been under such pressure. Thanks for the update, Isabel. Well, as broader markets absorb uncertainty, some are questioning whether valuations can hold up much longer. They're anxiously looking to see where cracks could form first. Last week on Bloomberg Deals, Paul Weiss, global chair of M&A, Robert Kindler, said crypto could be vulnerable. Check it out.
I'm not smart enough to know if crypto is good or bad or valuable or not. But when you go through these cycles, you do have pools of assets that people are concerned about. And whether they prove right or wrong, who knows? But one of them is crypto, another one is credit funds. They may all be fine, but there in fact may be a trigger. And what is at least concerning to me is the high valuations in the market, that if we do have something triggering that, yeah, it could be a difficult time.
Well, a trigger to send markets falling. Certainly even more of a concern now than perhaps just a week ago. Here to discuss, we're joined by Dan Morehead. He's founder and managing partner over at Pantera Capital. It's a firm that has weathered many crypto cycles. In 2013, it did create the first blockchain hedge and VC funds here in the US. Pantera now has $3.8 billion in assets under management. Dan, I want to start with sort of an identity question when it comes to Bitcoin. As we've seen a lot of risk events happen around the world, specifically what happened over the weekend and continues to happen in the Middle East with Russia and Israel's war in Iran and Iran's retaliation. Does that change your view, the fact that people didn't go to Bitcoin as a safe haven? Does that change your view of the identity of what Bitcoin is and what Bitcoin acts like in times of crisis?
No, I think the perspective we should have is Bitcoin is one of the only multi-trillion-dollar markets that trades 24/7. So when there is a geopolitical event on a Sunday at 2 a.m., Bitcoin's really the only thing you can sell. You have to wait till the New York Stock Exchange opens to trade equities. So I do think it will have short-term correlation with the S&P 500, but if you zoom out over any longer period of time, it has a very low correlation with risk assets, and then obviously it's been appreciating for 15 years.
There's a lot of discussion on exchanges about 23/5 or 24/7, call it whatever you want to will, tokenized stocks and equities, and the idea is that Bitcoin will no longer be the only thing that is traded 24/7. Does Bitcoin's role change in a world where you do have equities trading 24/7?
That's a great point. I think it will. Figure just listed the first stock on the blockchain itself, and once that becomes popular, once all equities are on the blockchain, which inevitably they will, then you won't see what we just have seen in times of crisis. People don't have to sell Bitcoin on a Sunday at 2 a.m. They can sell U.S. stocks.
You've also said that crypto looks very cheap relative to AI, with top AI names trading at a premium to trend and Bitcoin at a steep discount. What is the market missing?
Yeah, so I would say that I'm not going to make an opinion on whether AI is overvalued or not, but it is up way faster than its trend. It's trading at about 20% above its 4-year log trend. And Bitcoin as a proxy for industry is literally the polar opposite. It's trading at 50% below its long-term trend. So I've spoken to many investors that really just can't pull the trigger on some of these AI rounds that are happening right now. And if you have that mindset, blockchain probably is a good kind of proxy. And the thing to remember is AI agents have to use blockchain. These are very, very correlated industries. So if someone is looking at AI and really can't stomach those valuations, which have surged above their trend, I think it's great to look at Bitcoin because it's very cheap relative to its trend.
And you also said you don't know whether OpenAI, Anthropic, or xAI will win the AI race, but you're certain they'll use crypto. How might that look like in practice?
Yeah, I think that's a super important point that AI agents aren't going to go down the street to a ionic column marble bank and get a normal bank account and transact in paper money. They have to use electronic money. So as AI agents become more impactful, they have to use blockchain assets, and that will just increase the demand for blockchain assets.
Dan, I'm so interested in that world that you're painting for us. So I'm going to ask you to paint it a little bit more. We, in your view, in the coming years, are going to have AI agents act in a fiduciary or financial capacity on our behalf?
Oh, it's already happening. AI agents are doing commerce. It's spinning up very, very quickly.
Are they using crypto or are they using USD?
No, they have to use crypto. Most AI agents will have to use crypto because they won't be backed by entities that can go get bank accounts for paper money.
And Pantera deployed more capital in 2025 than in any other year in the firm's history, and you led 85% of that. What are you seeing on the ground that gives you conviction, despite the route that we are seeing?
Yeah, so we've been in the blockchain industry for 4 of these massive cycles. Anything as important as blockchain that's going to change the world creates hype, and sometimes it gets overvalued. And then we've been in 4 bear markets where it's gone down considerably. This is actually shallower than the previous ones. And we found this is the best time to put money to work. And so we are investing in venture companies and protocols that are creating things today. And once the market cycles back through, they should be able to exit at strong valuations. And you mentioned a couple of the companies gone public recently. 10 blockchain companies went public last year or in the last 12 months.
Yeah.
5 of them are Pantera companies. That is great for industry because then we can recycle the capital back into new entrepreneurs doing other things with blockchain.
So let's go deeper into that, Dan, and I want to hear from you what's exciting to you at Pantera, where you're deploying money right now, and what you think will be those next blockchain-based companies that do hit the public markets.
Yeah, so we have done probably 6 investments in the intersection between AI and crypto. AI is obviously a very important sector. A really cool anecdote, there are 4 humans that are investing $650 billion in CapEx this year, and that's 30% of all the CapEx of the S&P 500. So we're in a very, very interesting time. And so we're investing in companies that are doing AI-oriented blockchain projects. That's been very successful. That's been our largest investment over the last 12 months.
I want to ask you about Hyperliquid. What do you make of it? You've recently made an investment there, and obviously it's one of the bigger players in the space.
Yeah, we've been very bullish on Hyperliquid. There's also a DAT that is invested in Hyperliquid, and we've been involved in both.
Dan, before we let you go, I just want you to sort of, I know you said you wouldn't make a valuation call when it comes to these AI companies, but you're obviously finding the crypto companies attractive right now. Can you give us your call on sort of a level or a bottom for Bitcoin? I mean, it's interesting. If you look at over the last 20 days where Bitcoin is, it's kind of flat over the last 20 days, hovering around $67,000, $68,000. Is the next move from here up?
Yeah, it's a great question. We've seen 3 of these big cycles before. Each of them averaged about 380 days, plus or minus 20 days, so very, very tight time frames. That would mean the market could go down till the end of the year. And then the previous cycles had been deeper than this, so there might be another 10 or maybe 20% that the market could go down. But anytime an investor is able to buy something at 50% below its trend, you're really stacking the odds in your favor. And remember, this right now, it's the lowest percentile relative to its 4-year trend, and the 7th percentile relative to its 2-cycle 8-year trend right now. So it seems like a very cheap time to buy. Yes, it could potentially go down a little bit more and could stay down. But a very important point to remind everyone is anyone that's owned Bitcoin for 4 years has always made money. So if you can scale it appropriately, so you can hold it long enough, and you can hold it for a multi-year period, you'll probably do well.
Dan, always appreciate your perspective. You sound like somebody who's been doing this for a long time, and in the crypto world, you really have. So we appreciate you joining us. Dan Morehead, founder and managing partner over at Pantera Capital. Well, coming up next, prediction markets. They are meeting a geopolitical flashpoint and raising our among many as bets are taken on the Iran war. We discuss next. This is Bloomberg.
We're just about halfway through the trading day in New York. I'm Norah Mulinda. Let's take a look at your midday movers. First up, U.S. stocks are falling as escalating tensions in Iran and a further spike in oil prices ignite fears of an extended conflict that has the potential to stoke broader inflation and decrease the need for interest rate cuts. The S&P 500 and the tech-heavy Nasdaq 100 earlier dropping more than 2.5% for their biggest intraday losses since October. Volatility spiking as Wall Street's fear gauge, the VIX, topped the 28 handle earlier in the session. Meanwhile, oil is surging for a second straight day. The conflict is causing export disruptions in the Strait of Hormuz and leading to production cuts in Iraq and potential alternative delivery routes from the Red Sea. The fallout is sending Brent crude jumping for its biggest gain since July 2024, with the benchmark earlier climbing above $85 a barrel. Meanwhile, WTI is surging for its highest level on record. European natural gas prices spiked to the highest since 2023 amid uncertainty over how long the shutdown at the world's largest LNG export plant in Qatar will weigh on global energy supplies. Benchmark futures surged as much as 48%. Finally, at a time when investors are rushing for safety, the U.S. dollar is still proving to be the primary asset of choice. The greenback earlier gaining more than 1% for its biggest two-day rally since February 2023. Those are your midday movers. I'm Norah Mulinda.
Well, let's get to the odds. An in-depth look at the booming growth of prediction markets. As the U.S. and Israel prepared to strike Iran, platforms like Polymarket saw a surge in activity. According to Dune Analytics, bettors placed $425 million in wagers on geopolitics questions on Polymarket last week. That's up from $164 million the week before. Meanwhile, some users are alleging insiders with knowledge of military operations are making it big on the markets. Kailey says it does not offer markets that settle on death. Such contracts would largely be prohibited in the U.S. Bloomberg cross-asset reporter Denitsa TSekova has been covering this story. She joins us now. There are a lot of threads of this story. Denitsa, I want to start with this idea of what is legal, at least in the United States, to bet on when it comes to these geopolitical events. Can you bet that somebody's going to die?
No. So war, terrorism, and death are three categories that are widely seen as prohibited by the CFTC. It's a very complicated two-step test. That's why we say it's widely seen. What we see with the two main prediction markets we talk about all the time, Polymarket and Kailey. Kailey is obviously mostly in the U.S., CFTC regulated. Polymarket is entering in the U.S., but it's mostly operating outside of the CFTC, is mostly outside of the US. So we're seeing two very different responses. That said, both companies drew a lot of backlash. Polymarket for the reason of listing all those contracts. There is direct military action, death, terrorism. There is all those things people are worried about. Kailey did also list a similar contract, but it was more tied towards Khamenei being out as supreme leader. And they had a special carve out for death, which in this case was the case. It became a whole complicated settlement process. So Kailey tried to kind of play closer to the CFTC rule. It became an even bigger backlash with that. So it's really hard to work around those rules.
Denitsa, we unfortunately have to leave it there. Your reporting on this has been great. Emily Nicole's reporting has been great on this too. Check it out all on the Bloomberg terminal. For more on this, let's bring in Yesha Yadav, professor of law and associate dean at Vanderbilt University's Law School. Professor, good to have you on here. Can you draw a distinction between what Polymarket offers, what Kailey offers, and where the CFTC leaves room for what is and is not allowed? Is that clear?
Tim and Isabel, thank you so much for having me today. Really, this is an evolving landscape at this point. As you guys just highlighted, there's a difference between Polymarket and Kailey. At present, Polymarket, for the most part, operates outside of the U.S. It is technically, if U.S. persons are not trading on it, really outside of the jurisdiction of the CFTC, and Kailey is, of course, very much within it. Right now, of course, there is a huge effort just to try and get the regulators' arms around exactly what is going on in terms of being able to set some guardrails for US-based, US-controlled prediction markets and actually create a value on compliance and good standards as something that is going to promote market growth and integrity. So, for example, last week, the CFTC came out with an advisory saying that they were very positive about Kailey's actions to discipline two traders for insider trading on its platform. The CFTC emphasized that it has jurisdiction over these issues. But at the same time, of course, a lot of commentators are pointing to the fact that Polymarket is outside of the U.S. It is trading contracts that are potentially a little bit in that gray zone that the CFTC is really unable to get its reach around. So this is very much an evolving area, Tim.
Do you think that Congress could step in to clarify the rules around maybe material non-public information in these kinds of markets?
Isabel, this is something that the CFTC, I think, is actively working to do. Now, one thing to emphasize here is that the CFTC is a regulator for derivatives. These are contracts that are helping people to hedge their risk in the market. So with respect to oil or wheat or credit risk. Now, in the case of derivatives in general, if you're looking to hedge a particular risk, you're the person that knows the most about it. So in that context, generally for derivatives markets, there's a greater tolerance for being able to use information that is inside to you, that is really private to you, to be able to take those positions. Now, in the case of prediction markets, of course, there is a very different game in town, which is that increasingly what we're seeing are people who are very close to the action, people who are maybe at Bad Bunny's show, people who are, like the camera people or the people working in the gardens, people who are working at Taylor Swift shows that are able to have some really detailed insights into what is going on. Now, establishing who has the duty to keep information secret, not trade on it, that is one big question. And then, guys, there's another big question, which is how do you enforce this stuff? The enforcement part is extremely difficult, particularly if you have markets like Polymarket where folks are operating on blockchains and are therefore much more pseudonymous.
Yesha, we are going to have to wrap it there, but you got to come back soon because
I'd love to.
The prediction market story is not going away anytime soon.
It's going up and it's going to get more complicated.
Thank you so much. Thank you so much for joining us. Vanderbilt's Yesha Yadav. Well, breaking just now, Josh Kushner's Thrive Capital and venture firm Andreessen Horowitz are co-leading a fundraising round for Anduril that could nearly double the defense tech startup's valuation. Bloomberg's Ed Ludlow broke the news, and he joins us now. So a $4 billion round, Ed. I thought $8 billion was what the company was going to raise.
Yeah, so the status of it is that it is Thrive Capital and Andreessen Horowitz leading a $4 billion raise, the post-money valuation around $60 billion. We had reported last month that they were in talks with various investors to raise up to $8 billion. But at the end of the day, like, Anduril is such a sought-after investment in the private markets. You know, it's very much in the kind of bucket of pre-IPO names. It is at the sort of forefront of the wave of Silicon Valley and other national defense tech startups that are getting tangible wins in contracts with the military apparatus of this nation and with Western allies. And, you know, at the time we did the original reporting on the round, a big focus for Anduril was to bring in some like crossover investors, right? The type of investor that when you are looking further afield to an IPO would sit on the cap table. But Thrive, very sizable venture firm, just raised a $10 billion fund. Andreessen Horowitz with its American dynamism team, very much at the forefront of the sort of intersection of technology and national security and national interest priorities. And they have a lot of ambitious projects throughout this nation.
This is a fantastic scoop, Ed, and you said a fundraising round for Anduril could nearly value the defense startup's tech valuation. Do you think we'll be seeing more funding, especially in the defense world, because of the geopolitical crisis and honestly because of the growing market?
Yeah, I think with Anduril, they win a lot of defense contracts, but it's clearly not at the same scale as some of the legacy primes. And in the markets today, with what's happening in Iran, and especially in air defense and attack systems, right, that's very much the legacy primes territory. They also have a lot of development contracts and grants with various arms of the US military to develop the kind of next generation of anti-drone, mixed reality, wearables among our fighting infantry. Like, those are all domains that they're trying to push forward, including in autonomous vehicles, both terrestrial and in the water. So right now, I think they're trying to grow their manufacturing base in Ohio. They're trying to expand their footprint in California, and that's a part of the fundraise as well. And
we can't forget, too, that this all comes against a backdrop with a Defense Department that had a real back and forth with last week with Anthropic and everything that happened with OpenAI in recent days. Ed, before we let you go, do we know if Anduril's technology is being used at all in Iran? Just have 30 seconds.
Excellent question. We do not know. There is no evidence that any of Anduril's systems have been used or deployed in Iran. But look at the Bloomberg economic summary and the BI summary of the systems that have been used, but no evidence that Anduril has so far. I've asked.
All right, that is Ed Ludlow of Bloomberg Technology with the headline and with the scoop, the breaking news. Check it out on the Bloomberg Terminal and for everything that Ed and the team cover out there in San Francisco. Let's do a check of the markets and take a look at how things are looking. The S&P 500 off its worst levels of the day, but still under pressure, down 1.4%. The NASDAQ 100 down 1.6%. You can see yields there. Look at that. Lower, or rather higher, just barely, the 10-year and the 2-year. That is going to do it for Bloomberg Crypto. A big thank you to Isabel Lee for stepping in for Scarlet Fu this week. We're going to be back, same time, same place next week with Bloomberg Crypto. This is Bloomberg.